Hello and welcome to Crypto Weeklies. We analyze an Algorand today. Now that in the last 7 days, the crypto has rallied, roughly speaking, 20%. Still market cap below 1 billion. But in terms of tokenomics, does have some of the great circulating supply versus max supply ratio. Almost 90% of the max supply is in circulation. Again, not financial advice. If we check the current price, it's at around 10 cents when we made our last algo related video. So this is let's go to the home page. This is MicroStrategy. We made a video on it yesterday. If you check on Crypto Weekly's homepage, this is the website homepage, and on this you can find the YouTube videos as well. On the channel you can see the algo 2026 outlook and the macro bottom related discussions conducted over 2 days ago. Back then the price was close to 8 cents, and at that point the price was very close to that area of support, as mentioned in that video, that white line of support over here, where the price action has found some sort of a bottom since 2023 began. Now that the price action has now rallied from that level. Now the price action has come as high as about 20-week simple moving average, 21-week exponential moving average. But the bad news is that in the bear market, what typically happens is that as the price action rallies to the 20-week simple moving averages, there is usually a resistance. So for example, in the last bear market, again from 2022, when this bear market kind of began in January 2022, as the price approached, essentially the bear market started in 2021. Then there was one major crash at the end of the year. The 50-week simple moving average, this blue line over here, provided some support. Then the rally continued to the 20-week simple moving average, got rejected, and in the subsequent rallies, again you can see as the price action went close to the 20-week simple moving average or the 21-week exponential moving average, it met with a severe resistance, and this continued all the way throughout the year. Again, even this fake out over here lasted a couple of days, and then the 20-week simple moving average kept on acting as a resistance all the way throughout the end of year 2022 and most of the year 2023. There was a major breakout at the end of year 2023 in October. So if something similar is in store, again this time around might be different, as the price action did not get extended that far high to the upside from the 20-week simple moving average in the bull market. So there might be a case that, again, apart from this major extension that occurred in December 2024, when the price went to 60 cents, back then the 20-week simple moving average was only 16 cents. So more than 3x rally of that level. And in 2025 in July, some extension, but not that great of an extension in 2025 as well. Now potentially at this level, the 20-week simple moving average coming and again acting as a resistance is more than likely. If not, the next level of resistance is the 50-week simple moving average, which is at around 17 cents. And again, you can see that this is more of a reliable indicator. When the bull market continues, the price action acts or uses this resistance level as a support. The 50-week simple moving average acts as a support, but in the bear market, it's one of the harder resistance to get over. Even if in the macro counter trend rallies, price action does not go above the blue line anytime in that bear market here. So those are the two things to watch for in the short term. Nothing else has changed, although there was a short rally of that area of support over here at 8 cents, and the price action did have a counter trend rally that shifts the algo related discussions slightly. The DCA level, or the time weighted average price based difference, is now negative 75%. At negative 84%, that's where the lows were found in September 2023. So still in that time weighted average price based risk level, and again the time weighted average price is going down with time since 2022. Is currently at around 43 cents, but the risk level for accumulation is relatively low for algo, as it was throughout the course of the bull market and the bear market, as price action did not go meaningfully above the um, time weighted average price in the last rally. The regression based fair value estimation for ALGO has signaled this area above the fair value. Now that the price action is above 10 cents, the price action is no longer undervalued per this mathematically derived fair value for ALGO using its own historical price action and trying to cut the price action into two halves in a non-linear fashion using polynomial regression based techniques. Says that right now in this bear market, if the price action is above 10 cents, the price is not, or ALGO is not in an accumulation zone. The worst case scenario for ALGO is the drop to 5 cents, which may manifest in the second half of 2026, depending on how bullish or bearish 2026 second half is. In terms of the machine learning based price analysis, the counter trend rally ceiling is at around 12 to 13 cents for if the counter trend rally lasts April and most of the May. On the other hand, if thanks to this short pump, the floor has kind of shifted. Now if there are two more bearish months, let's say, we don't know when those bearish months will occur, but let's say those bearish months start at this price, 2 months would be entirety of April and entirety of May. Now that we are in April, the entirety of May, if the price action support is now at around slightly under 7 cents rather than 5 cents, it would take more than 3 months of downturn to get to a price action closer to 5 cents for ALGO. So that's the kind of a silver lining thanks to this macro or micro counter trend pump. The ALGO estimated bear market bottom is already very close. Now that price action is 11 cents, the base bear bottom is 10 cents, the two standard deviation or panic bear case is 8 cents, and the worst case is 6 cents. So 25% away from the panic case, 9% or 10% away from the base bear case. What lies on the other side potentially, if let's say everything goes well in 2026 and there is a decent recovery in 2027 2028, the base peak forecasted for ALGO is somewhere between 73 cents and the bull peak at 76 cents. So midpoint is at around 75 cents. That, roughly speaking, from 10 cents bottom or 8 cents bottom, that's roughly somewhere between 8 to 10x of that bottom. With that, I'd like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. And check out all of these charts which are available for free on cryptoweeklies.com. That's my own website. This includes lots of individual indicators such as the overall crypto related TLDR news analyzer, what's the overall sentiment, what's the overall sentiment score analyzed in the last 24 hours worth of news. What are some of the popular narratives you can see over here at the home page as well. What's the overall social sentiment risk, if there is any individual narrative popping up over here. What is the composite risk score of some of the major cryptos, which is an aggregation of all of our risk based models to identify if these cryptos are in an accumulation zone, if they are in deep accumulation or shallow accumulation zone. Right now most of them are in shallow accumulation territory. So these kind of indicators analysis are available not just for ALGO but for most of the major cryptos by market cap. With that, hope you enjoyed the content and hope to see you again tomorrow. Thank you and have a nice day.